just on a very personal level, especially given what we were seeing in the markets this week.
Yes, yes.
How have you felt about this?
I am excited to be here. It's been the culmination of the work of hundreds of people at the company. So it's just good to get it done, and I'm looking forward to going back to building. And good environment, bad environment, we're going to be building a great company.
Okay, but given what's happened in the market, I mean, tell us in terms of the pricing, we're $45 a share, which is at the lower end of things. How do you think about that? How do you think about that in terms of your raising about $8.1 billion? That's probably less than you wanted to raise. Is that the environment? How much of that was this China news this week? How did you think about that?
Pricing a deal is an art, not a science. So we will probably have had it imperfectly, but we thought that at this price, it reflected the environment. And listen, the environment is uncertain right now. And any time there's uncertainty in the market, investors are going to be a little hesitant to put $8 billion of their dollars to work. And we wanted to put our stock with a group of funds who we know aren't just going to hold for the next week, but they're going to hold for the next year and hopefully for the next 5 years. So when we looked at the environment and we balanced how we really think of this company long term, this was a great result. $8 billion is plenty for us to build and grow on top of.
What kind of runway does that give you?
Very significant runway. We're quite confident about the road ahead.
What was the lesson of the Lyft IPO, and how did you feel when you saw that stock really drift down over the past couple of weeks since that IPO?
Yeah, listen, I think that there's no perfect lesson here. I think that they probably did the best they could with the data that they had. It led us to be a bit more conservative, and it did lead us to place with mutual funds that we trusted, with whom I've had relationships with the past, et cetera. But again, all of this, when you're in the middle of it, it's very easy to second guess it 2 weeks later. But when you're in the middle of it, you do your best, and I think they did their best at the time.
What does success look like today for you? How are you going to measure the success of this IPO?
Success today is a stable price. A little bit higher than the pricing, not a lot higher than the pricing, because we want the pricing, we want there to be a fair price that the company received. But we're going to be measuring success in 3 to 5 to 10 years, not in one day.
Okay. The one question that every investor has, and I know you get asked it over and over again, is path to profitability.
Yeah.
Walk us through how you get there.
So we are already contribution margin positive, and for us the definition of contribution margin is quite fulsome. It's not just gross profit, it's much more. It's all of the expenses associated with the profits that a country throws off. We have top 5 countries of ours that have 54% contribution margins and are paying significant amounts to pay for the overhead and pay for the investment in the company. So for us, the path to profitability isn't theoretical. There are cohorts of countries that are profitable, and it's about getting other cohorts of countries to the same maturity level that some of our countries are operating at. We do reinvest profits aggressively in new business lines like Eats that have great promise, but we're pretty comfortable when we look at the portfolio of businesses that we have a very strong path to profitability.
So Lyft says this year for them is going to be peak losses. Peak losses are going to take place this year. Can you say the same for Uber?
That would be our intention, although there can't be any guarantee, but that would be the intent.
Right. We showed some video in the last hour when we had our conversation about the comparison to Uber. I'm sorry, you are Uber. Comparison to Amazon, I apologize.
Yes.
But one of the things I was thinking about is, when you look at where Amazon was at the time of its IPO, it was a much smaller company. It literally had $15 million in revenue. That was it. But it was also growing at nearly 3,000%. Your growth has decelerated coming into the 20s now. Is it a fair comparison?
It's a fair comparison at the wrong time. So a lot of private companies now are holding off much longer before they go public.
Right.
We are much bigger, much more mature as a company as we go public. And if you do look at the growth rates, our audience is growing 33% on a year-on-year basis. Transactions are growing 36%. To be able to grow transactions 36% on a $50 billion base is pretty incredible, and we hope to keep it going.
sort of larger question, and I don't know if we're going to see protesters today,
Yes.
but you saw that there was protests and labor strikes that happened earlier this weekend. That's a big question for the whole gig economy.
Sure.
What did you think when you saw those protests?
I thought that we have to do better. We have over 4 million drivers and couriers on our system. And how they make a living and how the system works for them is quite variable, because you can plug in, you can plug out whenever you want to. And as a result, for the vast majority of our drivers and couriers, it works. It's exactly what they want when they want it. But there's definitely a group where it's not working, and we have to do better to make sure that our system is the right system for anyone, anywhere who wants to plug in and plug out.
Okay, but let's talk about that risk, because in the S1, one of the things you talk about is our business would be adversely affected if drivers were classified as employees instead of independent contractors. And there's a move afoot in large parts of the world.
Yes.
On that front. Also, we should say that last night, in one of your filings, you said that you settled thousands of driver claims over being misclassified as independent workers, and that you plan to spend $146 to $170 million. Do you anticipate that there's going to be more suits like this?
I think this, the question of classification is going to go on for some time, because labor is such an important part of any society's means. We had a Department of Labor opinion that suggested that companies like ours in gig economy work did represent temporary labor, wasn't permanent labor in one way or the other. So we think we stand on the right side of the law. But we also have to be reactive to society. So, for example, in France, we've introduced an insurance program with AXA that gives drivers more insurance, more benefits where they need it. And we're going to be flexible, and we will look, our goal is to make sure that driving for us or being a courier for Eats is a great way to either make some additional money or make a living. And that includes earnings, and it includes benefits over time.
In terms of profitability, how much does autonomy matter? How much does it matter that we get to that place? And I know we've talked about it, maybe 5 to 10 years before we really get there.
Stage one for autonomy is about growth and safety. So first, it's got to be safe. Then autonomy is going to bring down cost per mile, which essentially is going to open up another stage of growth for us. I think that profit time is well out, but I think the growth is well worth it.
And how should drivers feel about autonomy?
I understand when drivers are scared to some extent of what autonomous can offer, but we believe that you're going to have a hybrid driver and autonomous state. The machines are going to essentially take the simple, shorter trips that are less desirable, and that will leave the more complex trips, and hopefully the trips that have more revenue associated with them for our drivers.
Do you care if drivers drive for you or for Lyft? Most of the drivers I know in New York do both.
I care if many more drivers drive for me, but they can also drive for Lyft.
What about the rationalization of the business? A lot of people say, look, over time after the IPO, prices are going to have to go up. Both of these companies are going to stop, going after each other, in this almost ruthless way. However, you should know, last night I got a text from Lyft offering me a new promotion. And so I'm not really sure tell us about that competition.
Well, hopefully you're part of our loyalty program, so you'll stick with us. Thank you, and that's the whole goal of the loyalty program. This is a big sector. All right, the transportation space, the area that we're going after is 12 trillion or more. You are going to have competition. Competition makes you better. And the good news is, I think both Lyft and us have the ability to keep competing, to keep prices for a service very, very affordable, and over time to improve margins.
I've got to ask you a compensation question for yourself.
Okay.
So there's a note in one of the filings that says that if Uber achieves a $120 billion valuation on an average in 90 days following the IPO, you receive a lot of money. Are you expecting that now, given where the valuation is today?
I wasn't expecting it anytime short term. I'm here to stay. I'm here to build a big company. That compensation term is not about a single day. It's about what value you create over 10 years. And over 10 years, absolutely, I expect to get there.
And then finally, do have to ask you a little bit about the drama that's in the news. And I know he's going to be here a little bit later today.
Yeah.
Travis Kalanick, of course, who founded the company. He's going to be here with his father. There was a debate. I know he wanted to be up on the dais ringing the bell with you. Talk about that decision and what happened there. Because there's been a lot of headlines about it.
Yeah, sure. Those are unfortunate from where I stand. The dais for us is about longtime employees who've been with us thick and thin, and drivers and couriers who use our service. That's what the dais should honor, and I think that's the right decision for the company. I'm thrilled that Travis and his father are here to celebrate with us.
What's your relationship with him like now?
I think it's fun. He's a board member, and he brings an insight to the boardroom that reflects his genius and his experience with the company, and that insight really is valuable for us.
What are you going to do at 4 p.m. today?
Probably get a drink with my wife, Sid.
Thank you for being here this morning. We wish you luck with the IPO, and we wish you luck with the company.
Thank you. Thanks for having me.
Well, Beijing is sending a message that it's preparing to play hardball. The Chinese Commerce Ministry made a statement earlier today saying that Beijing will not succumb to any pressure from the United States. Now, this comes after the ministry had earlier said that it was going to take necessary countermeasures if the U.S. imposed new tariffs. Now, the hardline stance is giving us an indication of how the Chinese negotiators are going to approach the trade talks in Washington today. The delegation has arrived. And I was speaking to a source of mine on the Chinese side who is familiar with the Chinese way of thinking, and he wouldn't give me any specifics on exactly what the vice premier would come in terms of recessions, but he did say that the vice premier would be looking to try to clear up any misunderstanding. He said that the hope is to be able to make sure those tariffs don't get imposed. But he also reminded me that the Chinese feel that any attempt to change their political system or their economic model is seen as an infringement of Chinese sovereignty. Now, another interesting development was that the vice premier's title was changed. So he is no longer the presidential special envoy. Instead, he's been demoted, and that really suggests that he doesn't have a whole lot of leeway to make compromises on his own when he's there. So the U.S. business community here is preparing for fallout. They're really concerned because in that Commerce Ministry statement, there was an omission of a word, equal or in kind, or of equal size and strength when it comes to the retaliatory measures, which is what we've seen in the past. So that's been interpreted by the business community to believe that any type of retaliatory measure is now on the table. So they're all bracing for all sorts of stuff, like licensing delays, customs checks, as well as anti-monopoly probes.
All right, Eunice, there were, yeah.
I just want to ask
you read how many things that they supposedly reneged on, and it was, some people were saying they can't believe that he waited that long to say something. And I've seen so much analysis, you may have mentioned it, that they saw Trump saying we need lower rates and bashing Jay Powell and all that.
Well, that's what I was going to say, and this goes to the larger issue,
that they figured that the U.S. economy was weak, so they figured they had some leverage.
This goes to the debate we've had at this table, and people on both sides have had, which is if the president is bashing bashing the Federal Reserve so regularly, A, whether they should be doing that publicly, and B, people say, well, are there real effects for him doing that? Well, now there are real effects for him doing that. So I think there is a real issue with that, and maybe they misinterpreted what he's doing. Maybe there's some kind of weird negotiation, but it creates a real impact, no? I mean, that seems to be the argument that's been made in Beijing.
Yeah, that's right. And also just because there's been a feeling that the stimulus is kicking in here, that the economy is not, I mean, obviously some of the numbers recently have not been good, but that we're starting to see a bit of a bottoming out. So there is a bit of comfort that the Chinese economy can be, is on the way up while the U.S. economy is having some trouble. So there is an impact, and that potentially could be affecting exactly why the Chinese negotiators felt more comfortable to put some of the red line and the red ink through some of the comments on the trade deal.
Hey, Eunice, I was listening to a report on NPR this morning, and they suggested that China is trying very hard to make sure that its people don't hear about some of the angrier tweets that the president has sent out, that they don't know about these things. But they haven't cut off our broadcast while we've been talking about this, right?
No, they haven't. But, Brian just asked me on WEX whether or not President Trump's comment about how China broke the deal was online on state media. So I just checked, and it's actually not. So President Trump's, that comment that everybody's talking about in the U.S. right now about how China broke the deal is not being reported here. The tweet, the original tweet where he talked about the tariff threat is also very heavily censored. It's a little bit better now. You could see it sometimes, but most of the time they're just a big gray box. So it's still a very sensitive issue. And I also was looking at some of the other, whether or not Trump was being banned completely, and he's not. There's tons of stuff about the Russian investigation, about the tax returns. All of these other stories are there, but his latest approach and comments about the tariffs, totally non-existent.
Right. Also, I guess when he talks about his friendship with President Xi, they think that gives him, supposedly, they think they got some leverage there. And I guess he's said some positive things about the rebound of China's economy as well. So a lot of things changed in the last couple of weeks, and I don't know, that emboldened, reportedly, China to make some of these moves. So if he ends up,
I think what also was. Yeah, go ahead. No, what I was going to say is what was also interesting in my conversation with the person who I know on the Chinese side was the reason that another reason why Liu He was sent, he said, to the United States was because they feel that there haven't really been many modes of communication anymore between the U.S. and China. That the vice premier is really the only one, since the conversations have been going at a very high level, and that in the past there have been several different exchanges on various levels and plenty of different agencies, and that's not actually the case anymore. So you're talking about how President Trump is talking up the Chinese market or saying kind things about the economy. The Chinese feel that this is a very important relationship that they still want to maintain. They want to make sure that for the long term it's going to be good for both economies. So they want to keep that mode of communication still going. So I thought that was pretty interesting. And then also the Commerce Ministry today reiterated that the fact that China is sending a delegation at such a high level, despite the tariffs, is a sign of utmost sincerity when it comes to the Chinese trying to get some sort of trade deal done.
Okay. So the leadership is seeing the tweets, just like not everybody else is seeing. So okay, all right, we got it. Thank you.
My assumption is that they would be able to see the tweets. They might be able to get around the firewall.
Yeah. Okay,
but they
good.
don't actually. They won't actually reference the firewall. If you kind of talk to them, they'll just kind of say, we don't know what you're talking about.
Okay.
So they won't mention it, but I'm sure that they have access.
Choose Winters and Yonker, and we will send an attorney to you. You will sit down with that attorney, get a...
Rick Scott, Senator, it's good to see you. You talked to the powers that be. I know you're close to the administration. Give us something we don't know. All we have are things swirling around and conjecture and tweets and things like that. What's going on? What do you think is going to happen?
Well, first off, I think I never personally expected China to do a deal that was fair to Americans. This is a country that steals our technology, is building a military to compete with us, is not acting responsibly as a world leader. They're participating in the genocide that's going on in Venezuela. And look, I'm a business guy. When people change the deal after you negotiate a deal, almost never do those deals happen. So the president's doing what he can do to put pressure on them. He is going to make American products more competitive, which should help American companies. The president's doing what he can to stop what's been going on for decades of allowing the Chinese to take advantage of us.
So when it's all said and done, we're not going to accomplish that much, and that's going to be the criticism, that it was always going to be a toothless deal, and Trump just wants one so badly because the election's coming up that he's going to agree to something. And the critics that didn't want to even engage China in the first place are going to say that he got his clock cleaned by the Chinese.
I don't think he's going to blink. I don't think the president's going to blink. I think Lighthouser understands that China's been taking us to the cleaners for decades, and I don't think the president and Lighthouser are going to blink. I think that this is going to be good for American companies, and I think it's going to hopefully start making China more responsible. They won't have the money to spend on their military to compete with us, to go into places like Venezuela and hurt the citizens of Venezuela. So Look, I never expected a deal to happen because I don't trust the Chinese.
Are you on board that the tariffs actually are going to be economically beneficial to the United States and the citizens here, that it's not going to be passed along to consumers, and that it's not really just a tax on us that hurts both China and the United States, that it's a lose-lose? He seems to think that it can actually be a benefit to the United States.
I think it depends on the company. First off, it's going to make American goods more competitive. That's a positive. The amount of money we receive in tariffs, we need to make sure we give that, because it clearly impacts the cost of things. All that money ought to be put back through tax reductions to the consumers of this country, because it is going to raise some cost. So it's clearly a tax, and we ought to give it back to our citizens with additional tax cuts. But China is not acting responsibly. They haven't acted responsibly. They're building a military to compete with us through the profits from American products sold to American citizens. So I think the president and Lighthizer are doing the right thing, and I don't believe they're going to blink.
Then what does that mean for U.S.-China relations for the next 2, 3, 4, 5 years? It sounds like the Cold War 2.0.
Well, look, they're not our friend. We ought to stop buying their goods every day. We shouldn't buy their goods. They're taking those profits and trying to compete with us in the world stage. They are stealing our technology. So we have to understand they're not our friend. And it's no fun to go through negotiations like this where the other side won't be a responsible citizen. You can't do a deal with somebody that doesn't want to do a deal with you on fair terms. You can't do it.
The president likes it when the stock market goes up, talks about how many new highs he's seen. If this falls apart, there is no deal, I'm sure there'll be some effect on the averages here. Is that okay? Is that okay with you?
Let's look at what the average person cares about. We've got the lowest unemployment in 50 plus years. We got significant wage growth. So if you look at what the average person cares about, they say, do I have a job? Are my wages going up? That's what they care about. I mean, we'd all like the stock market to go up every day, but reality is, for the typical American, they want a good job, an American job, and with that you can, have the money through your government to pay for schools, keep people safe, all those things. But it's about, look at this market, look at this job market. That's what people are thinking about. They're not thinking about the stock market every day.
So I like to stir things up, and sometimes I get yelled at. But here's sometimes. Anyway, here's the Washington Post. Republicans are feuding over Burr. I mean, McConnell said it's over. Mueller didn't find collusion. What is Burr subpoenaing Donald Trump Jr. for? What was the rationale behind that? Have you talked to him? I mean, I saw what Rand Paul said. I saw what Ted Cruz said. What do you say? What's the deal? Well, he's a Republican. What's the deal?
Well, I'm not on the Intelligence Committee, so I don't know exactly what they're doing.
You have to be intelligent to be on that committee, Senator? I mean, that's kind of an oxymoron when using government terms, isn't it? Just kidding. But you're not on it, but you hear things. I mean, you must have an opinion on what Senator Burr is thinking. I think
all of us would like to know.
His North Carolina colleague said, what is wrong with you, right? So do you know?
Sure. All of us would like to know, and so I'm sure that Senator Burr will put out exactly why he's doing what he's doing. But I'm not in intelligence. Look, there was no collusion.
Yeah, back to the meeting. Back to the meeting, and tell us again after. I mean, it's just I don't get it. I mean, I'm speaking for you. I don't get it.
Yeah, well, I'm sure that Senator Burr will explain exactly what he's doing.
Since you're heading off to school, I got you this Brita.
Dad, I just got a Zero Water.
But we always use Brita.
Its 2-stage filter doesn't compare to Zero Water's 5-stage. This meter shows how much
Science has a way of revealing the unexpected, inspiring ideas we could have never foreseen. It drove us to eat bitter foods to make our bodies function better, and even inject a virus to fight disease. Moving humanity forward with digital tools, breakthroughs in biotechnology and chemistry, science is helping uncover ideas that are hard to grasp at first. But when we reach beyond our limits, we can achieve more than we imagined.
Your business goes where you go, and you go everywhere. Grammarly Business improves your writing from your desk, the airport, or literally anywhere. No excuses. Keep your team moving with Grammarly Business. Complete with centralized billing, easy seat management, and team writing stats. Visit Grammarly.com/business to get started.
Markets tend to trade on expectations more than they trade on events. So we already erased a lot of this year's gains this week when some of this volatility heated up, this headline volatility heated up, and then we get to the day where things actually go in place. And I think it could be a number of things, the most likely of which is that the market expects that we're going to get this done at some point, and we would agree.
Yeah, and it's interesting, Lindsay, because when you break out those giant Excel spreadsheets that you and your team have and all your economic projections, do you start to ratchet down those estimates now, or do you kind of wait and see how this plays out? It's got to be very difficult to try to forecast in this environment.
It is very difficult, and we do have to look at the different scenarios that could potentially play out. On the one hand, this could be more political posturing, the Trump administration really trying to amp up the pressure on the Chinese in order to get a deal done. In that case, it could have a very short-term impact on the economy if, in fact, these tariffs are put out there and then rolled back in the near term, just as a carrot to, again, get that trade deal pushed through to the finish line. On the other hand, if we do, in fact, see these tariffs implemented for a prolonged period of time, well, we do have to begin to factor in the negative expectations or the negative impact that we would expect on top-line GDP. When we look at what happened in 2017 to 2018, the fresh rounds of tariffs that went into play, they shaved off about 0.2 of a percentage point. Now you're talking about more than doubling the tariffs on the already targeted $200 billion. And of course, it's still hanging out there for new tariffs to target the remaining balance of Chinese imports. So this could more than double the impact in the current year.
Yeah, and let's focus on that for a second, Lindsay, because I think everybody knows that these tariffs are on industrial goods, wire products, things like that. The consumer doesn't feel it as much yet. $30 billion, which is the increase in tariffs, a relatively small number in a $17.5 trillion economy. But if we get those second round of threats, the 25% on pretty much, to your point, every single other good, toys, phones, shoes, clothes, stuff we actually purchase at the store, what would that do to the economy?
Well, that's going to have a much bigger and much more direct impact on the consumer. As you mentioned earlier, it was products that were particularly being used in the production of final goods. So producers were struggling to pass that cost increase on to consumers without the risk of losing market share. We heard from a number of large companies talking about eating that cost, putting that on their bottom line, or reducing margins as opposed to entirely passing that on as cost increases, onto the consumer.